this quarterly earnings season has been decidedly mixed. Now, one of the things that we have to absorb when we take a look at companies like Amazon is some companies are delivering and guiding to revenues better than expectations, which is great. But they miss on earnings per share, and I think it's mostly because of a self-inflicted wound, which is the realities of most of these internet companies. They are going to have to spend more to meet these regulations for privacy.
In Amazon's
and so if I see a
case,
company still growing its top line, but missing EPS for a reason of a self-inflicted wound, I think that's actually okay.
Absolutely. So in Amazon's case, it's investing for one-day shipping and other things I'm sure investors want them to do over the longer run. Facebook's going to be the biggest employee headcount company in the country in a couple of years at this rate. So they're trying to get ahead of these problems. But does it fundamentally, especially in Facebook's and maybe Google's case, change the economics of the platform if they have to hire that many people?
It's obviously going to dilute the profitability. So they'll go from rock star, unprecedented, wild operating margins to something less. But even as they go to something less, Kelly, we'll be in a situation where they'll still be wonderfully profitable and cash flow generating companies.
So these are companies you would hang on for the long run. What about Netflix?
Netflix, I'm more worried about. You know, this quarterly miss, not only in their domestic subscribers, which actually decreased for the first time in many moons, but also the dramatic miss in international subscribers has got me worried. And this is even before we have a full onslaught of video streaming competition in the October-November timeframe.
Right. And then in the spring, we have The Office moving to NBC and launching there. Are you worried enough to sell your holdings?
I actually have sold my holdings. It never was that big of a stake, but last week's earnings report and guidance really chilled me.
Okay. On 5G, we had some big news on T-Mobile and Sprint. That merger is going ahead today. I've been told that maybe it's good for the tech giants because it's going to bring another pipe, if you will, into the system so people can stream all of that content, for example, or use their technology. How do you invest around 5G? And maybe related to that, after Intel's strong numbers last night, is there anything different that you'd be doing in the chip space right now?
Yeah, this is interesting. So first of all, on the T-Mobile Sprint deal, looks like it indeed will happen. What I worry about is T-Mobile is the best in the group, even superior with its subscriber group to Verizon and AT&T, but it's merging with a company that is a loser. And so this is awesome for Sprint and SoftBank, the company that controls Sprint, shareholders, because they're getting a bailout. I actually think it's bad for T-Mobile because you're diluting yourself with a company that's worked.
Isn't that spectrum that Sprint has attractive to T-Mobile in the long run for 5G?
It could be. It's obviously going to be great, as you said, Kelly, for another pipe. Also good for the consumer. I just don't like this transaction. So when I come to play 5G, I look elsewhere. And actually right now, today, the worst performing stock in the NASDAQ 100, bar none, is a company called Xilinx. And Xilinx is 2/3 of its revenues for this chip company are wireless and wireline. Obviously, the stock got dinged today when Larry Kudlow said, don't expect anything anytime soon from China. But if and when that's resolved, that might be a much better way to play the 5G theme.